Trading, you know what that is? You just put in what you were studying and you can follow it, but not invest any money. Like you say, I bought, like today I'm gonna buy, and you look at the screen and it says Apple's at 230 or whatever it's at. Right? And you can buy 10 shares and then you can follow it and see how you did before you jump in. Or you can, there's actually, I mentioned last week, there's a website, Upside.com out with buy upside, and you can put in the stock and say I want to buy Microsoft in 2002 in January and see how it did. Or I'll do that with something I buy and see how it's done over the last 3 years. Because there's some companies that are so good, you know, Microsoft, Amazon, in the last 20 years it's gone up. Yeah. But I mean, hindsight is 20/20. It's just that if you know a good company when you see one, and that's part of it. He can go over too that the other things for value, the Warren Buffett way, is that you have good management who is invested, that owns a certain percentage, has so many years of experience. Other factors like the moats, and there's different kinds of moats. Yeah. So if you study that stuff, that's important too.
That's I work in the utility industry, so I know very well the assets there and how they moat them and use the regulatory environment to create fail
If they're a leader in an industry, that's another thing. Rule breakers is that the top dog in an industry. And David Gardner's expression, unless you're the top dog, the view never changes. And this means if you're in a bunch of huskies and they're pulling the sled, if you're the second and third, you're just looking at somebody's ass. You know, if you're front, you see everything. So when you pick somebody that's a leader, chances are they're going to continue to lead. It's like people that like to buy things when they go down. Rule breakers, they're not afraid to buy things when they're going up, because if the trend is up and there's a reason for it. They got to have all the drivers and the dynamics of good management, good market with good profits, and that's picking the right companies is a big thing. In fact, you know, with the different series like Stock Advisor, the largest Starfleet, they have a lot of different groups. They have groups that are cheap and large, but they've been picking for 20 or 30 years. And that one, they said, you know, they usually keep things when they track it to the S&P, and you can look back like, okay, we picked Under Armour first time in 2011, and they say, and this is how it's done. You can see the graph. Now they do a little point on when you belong to it where there's a green dot, and the green dot on the graph means we picked it here. We'll go up or down, and you can track it back. But I mean, then they take them off there. But they said of all the things, they picked the two brothers, one stock each month for a stock advisor. So they picked hundreds of stocks in the last 20 years, like 300 or something each. And then they track them, and there's like maybe 200. You can look at all the ones they picked, and you know, in charts, and they track it. And what they did mention is of all the ones they picked, if they held on to them and not let go, they would have done better than what they did. So just like you said, if they had a reason to buy it at the beginning, you know, people go out of positions, but they would have had more money if they held on to their losers too, because even the ones they thought were losers.
You held on to your fundamental thesis in the beginning, you would have just made tons of more money. So I learned that back in 2010 up to 2013 when I was managing money, and I realized all of my old positions were worth more than my current positions. And then I kept reading. I went to like each individual university and read different research about underperforming and outperforming. And I was trying to see if it's a psychological thing or it's just a position thing. It's as simple as just holding on to good positions, right? Because how many times are you going to see Apple again, or Tesla again, or Under Armour again at its low price?
Warren Buffett says it's like you have a dance card with 10 punches in your lifetime. Meaning that if you can pick 10 good companies, you'll do fine. You don't want to pick 100, but just pick the right ones. In fact, most of his earnings are in Berkshire Hathaway, which is like 72 companies that they acquired and just hold on to. They don't change the companies because they don't want the manager to change. They take a passive thing there and hands off. You know?
A hands-off passive approach, but active approach.
Yeah, when they first make the investment.
Right. The only time you're active is your first time, and then you're passive the entire time after that. So are you guys Kraft fans? Use ketchup?
ketchup, yeah.
Yeah.
What type of ketchup brand do you use?
Generally not Heinz, whatever the store brand is, but I know it's probably made
Trader
by Heinz.
Joe's?
Yeah,
or-
yeah.
Okay. What about you, Rob?
Yeah, casually.
Casually. Okay. So you're not like a fan of like Kraft's or Heinz ketchup? in
No,
a
I'm not
sense?
I'm not a loyalist. to the
No.
brand.
What about soda?
For what?
Sodas, orange juice?
I don't really drink too much of that.
What do you drink?
Coffee.
Coffee? Okay. And water? Okay.
Water and beer.
Yeah, beer. That's,
Usually, people that come to this group, they're kind of like on the not the loyalist type of people, but there's a reason why like Coca-Cola obviously is, as big as it is. So Kraft's, right? The reason why I asked that question is because I just want to get kind of like a sense of what's going on with them in terms of does their brand matter anymore, and we'll see why. So I bought this stock a while ago because I wanted to try like a new historical company, right? I didn't want to do Coca-Cola because I felt like that market was getting saturated. They weren't performing as well as Pepsi. Pepsi is getting into kind of like healthy drinks in a way, and Coca-Cola is still all kind of like junk food type of drinks and food. Kraft's and Heinz, they're more of a niche commodity, and I thought that that have staying power for 30 years, right? But luckily for me, there are certain things that happened that made me dig into Kraft's to realize their fundamental opportunities in the future. So I bought it around